Hey, good morning, everybody. Comment allez-vous? Today is, I don't even know what day of the week it is. It's amazing. I know it's the 13th. I'm like, PPI, right? PPI. What day is PPI on? Must be a Tuesday. Yeah, I think it's a Tuesday. My wife asked what day it was yesterday, and I'm like, well, tomorrow's PPI, not PPI, so that must be the 15th. So therefore, today is the 13th. So let's get through it. All right, Tuesday, November 14th, 2017. Yeah, the three central banks. Did you ever do that? Like, you count the calendar like it's oil inventories day. It's not Wednesday. You're like, what day is it today? Let's see. Oil inventories came out. It must be Wednesday. So anyways, that's how I think. So today is the day before CPI. So PPI is probably coming out. It's true though, right? What day is it? Well, tomorrow's CPI must be the 14th. So, anyways. GDP must be coming up. Anyways. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay humble, focus on the long term, and never risk money you cannot afford to lose. Hang on, I want to adjust the lights. Is that better? A little bit, maybe. I don't know, it makes my beard look white. It must be the light. Weird. Oh! What the heck is that? Like, what's that blue light behind me? Anyways, dude, whoever just posted that, I can't read all of that. Cool. All right, so, all right, let's move on. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you. I appreciate you. I am here every single day to assist any way possible. You just ask. Papa Wayne will be happy to help. We do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Thank you for posting your trade plans. Brandon, how come you don't use your rig? I do. You mean for webinars? I got a lot of funky feedback from people. They're like, why do I look at the back of your head? Blah, 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 blah. So I don't know. And one day I was coaching here and doing stuff over there. And it's fine, and it's good because my coaching platform has always just been one screen, not all the other stuff. So that's helpful. Also, I'm doing other forms of financial trading, but I'm also primarily a college student. Yeah, oh yeah, I use them, but not for the webinar, yeah. How about that, now that you ask? Robert, I can't tell you. Robert, what? I can't tell you that. So funny, Robert. Yeah. Anyways, can we just move on? Let's just move on. Anyways, I think you can see colors, right? Everybody happy now? I've been up for hours and hours and hours. How about you? Okay, let's go through the world. Yeah, Martin's like, yeah, but the time zone helps. Yeah. Yeah, not a full night anyways. Yeah, yeah. Cool. So, it's like, really? Is the chart even moving? Yeah. All I need to say about this is we've hit our target. We assumed it would stop. Assumptions are based on probabilities. We analyze this as having an 87% chance of stopping its rally. And, well, that's that. Okay. So maybe it breaks down, pulls up and down. I would look for a double top of a double top and then drop, or resume the upward move. Okay, we don't really know. So it really just depends on whether you're a bull or a bear. I don't need to talk about that one anymore because I've talked about it every day for a week. Same thing, same thing, same thing. Cool. That being said, we were waiting for a rally so that this will drop. So last week we had it coming down, then we presupposed it would come up. There's a cluster, there's a thing to the left, there's all kinds of things, so we thought it would come back up, which now it has. Remarkable, right? And now maybe one last drop. And that will be the complete retracement of this giant up move that we had. And while this was still moving up, we were planning the retracement back to this area. And I think, well, there's still hope for that last move, huh? Kenny's talking about a lot of stuff, but I'll comment on the last part. Can I say it's a risk-on story at the moment? When has it not been a risk-on story? So I guess 2009. I mean, it's been a risk-on story for 7 years, bro. Come on, Kenny! Oh my God, the stock market is at like 24,000. The risk on has been since 8,000. So we were at like 7,000 in the Dow. It went to about 9,000 and some change, 9,200, and then retraced back to 8,000. That was when you start buying at 8,000. Not 9, not 10, not 11, not 12, not 13, not 14, not 15, not 16, not 17, not 18, not 19, not 20, not 21 or 22 or 23 or 24, right? So yeah, we're at 24,000 now. What was the stock market when it crashed? What was the old peak? It wasn't even 20,000, was it? So anyways, oh. So was it really? Oh my God, that's amazing, eh, Jimmy? So anyways, I don't know, if you want to talk about this kind of stuff, then fine, let's do it. Are you watching the yield curve? Sounds like you are. Okay, what's the 2-year at? Or no, let's do 5-year. What's the 5-year at right now? What's the yield on the 5? No, let's just do yield. Let's just do yield. Just roughly. Okay, no? Nobody knows? Everyone's Googling. All right. What is the yield on the 10-year? Thank you, Ryan. What is the yield on the 10-year? Everyone's Googling again. Come on. You guys should do this. You shouldn't be Googling. I mean, these are basic questions. What's the yield on the 10-year? Look, I haven't looked at a chart on a 10-year in a bajillion years, but it's probably like 2.36, 2.37. Oh, you guys got it here. 2.39, so it's even up a little bit. Okay, but we can't crack the 2.4 or certainly 2.5. Did you know on the taper tantrum, we were at 3%? Did you know that? Like, what was that, 5 years ago? The 10-year T-note rallied all the way to 3%. So now that we're actually tapered out and jacking up rates, we're still only at 2.4? And bro, the 5 years at 2 point something? Like, isn't that a problem? Put it this way. If you lent somebody money for 5 years at 2.1, and then he's like, no. I need it for to go, right? Well, let's just make it 2.4. I mean, double the duration for hardly any difference. You see what I mean? Let's call the 2-year 2.1. Let's just call it 2.1. So and we're not even at 2.4. There's a problem there, right? All of a sudden, isn't the 10-year like too low? Yeah, right? There's something wrong, right? Do you guys ever think about these things? You're like, what's going on here? But this is where the money's made, right? This is the sort of the inside knowledge. So maybe the Fed starts thinning their portfolio. What happens when the Fed starts dumping 10, 15, 20-year duration assets? Yeah. So guess what's probably going to happen? They're going to raise short-term rates and long-term rates. Nice. That's cool, right? So there's some money to be made there. Yeah. Cool. So the bond market's going to fall. What happens when the bond market falls? Well, generally, what I was looking for is the stock market goes up. Yeah. Doesn't have to be our stock market, but somebody's stock market's going to go up, aka risk on. Thank you, Ryan. So now we're like, yeah. And then I'm just going to make another comment. Oh, what does the smart money do when they believe longer term rates are going to go up? What do they get out of? This is probably not even the right question. I'm probably not even phrasing it, but high yield, the high yield market. Yeah, it was a poor question. I don't even know how to phrase it right. But anyways, the high yield market, aka yield hogs, have started to exit junk bonds. I think they pulled out like 2 or 3 billion or something. I don't know. Anyways, junk bonds are falling. So it's interesting, right? They're able to get higher yield with less risk. Okay. So there's an interesting scenario, like the 10 years paying more, but the 5 years paying almost as much. Which one faces less risk? You want to lock your money up for 5 years or for 10 years when you're being paid about the same? So they call that duration risk. So you take the 5 year, all right, because over the period of time, interest rates may go against you. Or you get other opportunities that could be better, but you're locked in a 10 year. You're like, oh man, I'm locked into this investment for 10 years. Well, a lot of things can change over 10 years. A lot less will change over 5 years, and a lot less will change over 2 years. Okay? So there's all, you got to make these choices. So again, what if you were locked in a high risk bond, junk bond? Do you want to be locked into that risk for 10 years or for 5 years? Well, you're like, oh, well, 5 years. If the 5 year risk pays about the same as the 10 year, you could say, well, I'm not getting compensated for the other 5 years. Plus, the farther out, the second 5 years in a 10 year is riskier because you can't predict what's going to happen next year. I mean, very well, but you can kind of predict what's going to happen next year. But like, what's the Fed going to do in 2024? Actually, I don't know, right? You're like, 2024? Oh my God, I don't know what I'm going to eat for dinner tonight, So, that's risk. You have to take that risk. So if they pay about the same, right? So that's what I'm getting at. Well, if you look at the junk bond market, it's sort of the similar thing where, like the 10 year and the 5 year in the treasury market, let's just pretend like the 10 year and the 5 year in the junk bond market. Now, what I mean by junk bond, guys, is it means a high risk bond, but it pays a high yield. So like if you get a treasury and it pays you 1%, you could go to the junk bond market and pick up, let's say, 8%. You're like, 8%? Yeah, but the company might not exist 5 years from now, and you're lending it money for 5 years. Well, it may not be around for 5 years, so you're getting compensated for that risk. Okay. So, anyways, if you had to choose 8% for 5 years or 8.5% for 10 years, which one would you take? Yeah, you're like 5 years. You're like, you can keep the other 0.5% because that doesn't compensate me for the second 5 years. It would have to be a lot higher, right? You're like, well, I'll gamble for 10 years, but you better pay me 12, 14% per year, right? Because if you're going to go bankrupt in year 7, you better start paying me now so I can get out of that risk. But anyways, so I think the 10 year is going to move. 10 year is going to move. It's underpriced. Cool. By the way, there's our line in the sand that we drew yesterday or last week. What do you think about that? And then this red line I drew on Monday, so I guess that's yesterday, right? Look at that, it hit the red line and dropped like a ton of bricks with 2 hammers. How about that? Doesn't that just make you want to hug it like a teddy bear? You're like, nice. Are you guys working on predicting the future? Right? I'll remind you that the vast majority of people in this webinar said that knew the future, they would make a lot of money. Well, once again, let's go through some facts here. We predicted this double top, right? We predicted this retracement and drop, right? We predicted this retracement and drop. And then on Monday, we predicted this retracement up to here, drew this red line, and said it would drop. So I hope you made money. Because really, using technical and fundamental analysis is predicting the future. So based on your hypotheses, you do know the future. So you should be able to make money. It's traders that are not making predictions but are following the market that just never make significant amounts of money. Because they're always late. They're always picking up crumbs. Rabbit stew every day. Okay. So we'll see what happens, huh? Kind of neat. Oh yeah, gold was interesting yesterday, huh? We were in a buy zone and a sell zone yesterday. Right? This is where, oops, didn't want to draw that. Well, I'll leave it there for now. Okay. So this is where a bull would buy, and this is where a bear would sell. Okay. And here's the interesting thing. A bull would still buy here, right? Right? We know that, right? So we kind of did this somewhere on a different chart, but I said, I don't know any more than you do. I don't have any sort of behind the scenes data, but I can tell you there are working orders here, there are stop losses here for the bulls, and then for the bears, there are working orders here, and there are stop losses there. We know that because that's where a bull would buy, and that's where a bull would put his stops or her stops, and this is where a bear would sell. This is where a bear would put their stops, and we just know where they are. Because where else would they be? So, for example, let's just go bulls here. On an open, is it reasonable to think that bulls would buy a weekly swing open at that price? Okay, lots of people saying yes. Would they, I don't know, okay, so we're good there. Okay. Would they also put an order here? Is it reasonable to think that they could actually have a working order there? They're not even watching. They're like, yeah, well, if you drop down to $1,271.10, or is it $1,270.70? Sorry. If it comes down to $1,270.70, buy. It's reasonable, right? The thing is, would the order be here? Would the order be here? Would the order be here? The answer is no. Like, no. No, they wouldn't do that. No. How about that blue one? Oh, yeah, that's where it would be. right? How many people agree with that? That we can make an assumption that's specific, and that we can sort of discount the other ones. Cool. Now, a very second, or I guess third, okay? Third opportunity might be something like this, okay? But much less desirable, but maybe, okay? So you could have longed here, but most likely you had a place. Most likely you got taken out. Okay. Then there's another order here. We can assume that. I'm not making it up just because we have green candles. You should know this. And then lastly, the third place in which a bull would buy would be down in here. 1,000. Oh, geez, I can't see anything. I can't even see that. It's even the wrong price. No wonder. $1,265.48. We can assume there are buy orders there. Killer. And conversely, the sell zone, there's going to be some sellers sort of in here and definitely some up here. Where would they put their stops? You know, here and certainly up here, right? Cool, neat, neato, fun times, good talk. So we already have this all drawn out. Okay. And to put it into context, we've been sitting here a long time. Amazing, huh? Maybe. Okay, let's go through this one. Note that weekly S1, so we're talking about, okay, let's go in here. Okay, walk me through it slowly. We note that, yeah, go through again. So we note what? What are we noting? The weekly S1 and monthly M. Yeah. Well, I think that's what you're saying. What we broke out here, right? So this tells us a couple of things. I think if you're asking here, right? The 786 predicts the top. Okay. And the weekly S1 predicts the top, right? It actually predicts this. So based on just those two pieces of information, the 786. Oh wait, that would be this retracement. I mean, I believe what it's saying, Ryan, is that it wants to break out to the upside, but it's going to take some time. Like it could be all of next week. Okay. So for example, let's even get rid of the 786. Let's say it falls down here. Okay. Let's say it happens today. And then heads up. Well, the weekly S1 predicts the weekly R1. Okay, trying to get this out of the way. There we go. But that weekly S1 is also the monthly M2 is going to predict monthly M4, but I already did that. See, I already did that. So what it says is maybe down today, up the rest of the week, up all next week. So you could plan on something like this. Whatever. I don't know much. Oh, well, we don't know. Can't you just do it because people want it? Maybe they'd rather hold gold than a falling bond market. But remember, I've told you guys that when the global macroeconomic conditions are favorable, the dollar weakens. Okay? Do you know he wrote a book, Robert? Not about gold, but he wrote about, he has something like 200 rules at his fund. The guy might be a little crazy. Have you ever seen him on TV? This guy runs the largest hedge fund out of New Jersey, one of the largest in the United States. And this guy will F-bomb you on TV because he just forgets how to speak in front of, anybody. Humans, yeah, he forgets. Can you imagine, like, I'm on TV, well, God, you're like, holy, wow, you don't even have a filter, like, you don't even know that that's inappropriate. Holy smokes. This guy has $10 billion in the bank, personally? Really? Holy smokes. Yeah. go to commercial. Yeah, but it's amazing that you meet somebody like that, right? So what do you think about Tesla? Elon Musk could go, oh, whoa. Holy smokes, bro. Whoa. You're like, we're on television, like, most people know you can't say that. Yeah, but it's just Jersey, I guess. But it's amazing though, right? Like, you don't have to be a nice guy to run $1 million hedge fund, sorry, $1 billion hedge fund. There's like I can't even remember this guy's name. He was like a senior director at Goldman Sachs. And this guy will break your legs if you don't make money. Like, you wonder why Goldman Sachs makes a lot of money? If you get hired, you will work 24 hours a day. And if you don't make money, this guy, the director, comes over and breaks your legs. You're going to have to pull money out of your bank account to increase your returns. Like, can you imagine somebody like that walks in the office like, where's my money? Like, what are you talking about? I'm new here at Goldman Sachs. This is my dream job. F you, where's my money? I'll come back in 72 hours and you better have 100 million or I'm going to break your legs. You're like, oh my God, really? But I started this morning. Yeah. I'm from Yale. We don't make money. Yeah. But it's true. And you're thinking like Goldman Sachs, it's, it's all red carpet stuff. No, these guys are brutal. Right? You imagine the vice president walks into your office and you're like, what's that crowbar for? Whoa. Yeah. But, it's about making money. You got to remember, these guys are smart, but they're also competitive. So we kind of talked about this yesterday, not kind of, but a long stretch. I'm like, if you have a trade plan, you expect to make money when you pull the trigger, right? I mean, you should be shocked that you don't make money. So who's standing behind you with a crowbar? Maybe it's your wife or your husband sitting there like, all right, you took that trade. Where's my effing money? Because they're all standing there, right? Kids, spouses, insurance companies. Oh my God. You pay them tons of money, then you go get your blood. You go to the doctor's office. They take your weight. That'll be $4,000. $4,000? I pay you $4,000 a month in insurance premium. Oh yeah, but that's not covered. Like, what are you talking about? Right? So everybody wants money. So when you take the trade, you better make money. You should be surprised if you don't. You need to stop like this video game style trading of boo, 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 right? So again, if you're at Goldman Sachs, there's some guy standing there with a crowbar. He's going to break your legs. Like, where's my money? And I need it now. Need it now. Yeah, like a pressure cooker. Yeah. So anyways, right? Plan it, guys. Plan. Nothing should be a surprise except when you lose money. And you should be like, what? I bought at support. Who sold it there? Who would sell it at support, right? Like it should be, you should be happy to get out. You're like, oh my God, you're going to sell it down there? You can have it. By all means, keep selling. I'm taking a walk. This sucks. Right? So anyways, so we had dollar weakening. How many people would agree with that? That's what we've been talking about recently. I think for the last 3 weeks, okay, based on the last 3 weeks, based on our assumption on gold, which hasn't changed. Now, has gold gone up? No, not really. Has it made a lower low? Definitely not. Right? Definitely hasn't made a lower low, but it hasn't gone up like we hoped. Okay, fine. Maybe it'll take some time. Fine. But how about like in this time frame? Okay, the double bottom went up. Now this is 3 weeks ago, so we had it coming up and then retracing, and I think there was something else down there to have it pop back up. But anyways, so last week it double bottom, double bottom, breached out, pulled back, breached out, pulled back. Okay, so let's go in there a little smaller time frame. Okay, so here it is, right? So we were calculating how far it would break out. Broke out here, retraced. I remember doing this with you guys, so we don't need to do it again. Right? Pulled back. Look at the roll reversal. Okay? And now we're up here. Weekly R2. You know some idiot's going to start buying this, right? I mean, can you at least laugh about it now? You're like, oh my God, I'm going to get out, but I'm sure there's some moron going to buy this. And boy, are they going to be surprised. They've been waiting and waiting, apparently, for weeks for this to go up. Now they're going to buy it right at the weekly R2, monthly M3. Okay? You understand that this is profit taking. I don't care if this thing spikes 150 pips straight up. You'd be a fool to buy it. Like an absolute fool. What kind of idiot buys it at WR2? And could there possibly be a bear at monthly M3? Yeah, you would have to count on it. Somebody's going to sell it there. So this just broke up. Great, fine. You know, that's why we do things like roll reversals. Yeah, it'll come down. Maybe it'll go up. We don't know. But what happens if gold collapses on us? Then we have to throw that theory out the window, and euro dollar drops like a ton of bricks. But it's okay because we're not in it anymore, bro. Where were you last week? Do you guys remember doing the breakout? Somebody asked about, we were trapped in here, right? And somebody asked, Wayne, what's the target? Do you remember that? I'm like, what do you mean, what's the target? And I'm like, December or something, right? Right, do you guys remember that? And then I'm like, okay, look, here's how you do a basic thing. You measure the distance of the range. Oops, oh, look at that, I even got my pivot. Right? Here it is. And it's either going to go here or it's going to go here. It's funny, I got the pivot there, right? Remember that? I'm like, it's either going to be here or it's going to be here. Well, look, how accurate was I? So bad. Okay, but what happened? Then it retraced, roll reversal. What's it supposed to do? Wait, you're supposed to have it break and pull back to the roll reversal. Oh my God. You can write a book on it. Oh, I did write a book on it. Breakout, pull back, roll reversal, long and gone. You can call that a breakout of this. So that means it probably should come back to the roll reversal. Oh my God, it did. Okay, so it just broke out again. You could be facing one of these. Oh yeah, I'm not saying it will, but it could. Probably, may. I wouldn't be shocked. But we slam into this on a Tuesday. What if gold collapses? Euro dollar comes down, and you know, we could have a week like this where gold collapses on us. We don't have it technically set up that way at the moment. Boy, I have to, okay? But gold could just simply collapse. We have been waiting for 2 weeks for the big breakout, so let's say it doesn't break out. Well, I have to be stubborn. You don't have to be stubborn, bro. Wow, I'm losing my weird light this time of year, huh? Hang on. It's still not that good. All right. Nice! Now that's what I'm talking about. Go Pharaoh. I don't know what to do with my hands. Feels so awkward. Brian, have you ever seen him in his video where he tried out for Saturday Night Live? Have you seen it? So here it is. Here's the setup. You're asked to try out for Saturday Night Live. So you walk in, you're invited to the actual studios. There's nobody there. It's like a Monday morning, right? And you go on stage, they turn the lights on. There's one cameraman. But you know, the cameras are quite far away, right? And so he's sitting on the chair. The cameraman's like, go. And Will Ferrell's like, he's sitting there. And then he, like, in his mind, he says, I'm a kitten. And all of a sudden, he becomes a kitten. And he goes on for like 20 minutes. Just him in an empty studio. And the whole time he's thinking, like, this is stupid. They're not going to like it. Like, there's nobody laughing or anything, right? And he's thinking, I've made a mistake here. Nobody's going to laugh at this. This is stupid. But you have to be committed. In method acting, you're in character. That's it, right? So he's just sitting on the stage and he's playing with a ball and stuff. And he goes through the whole thing for 20 minutes. Like, he is a baby kitten. And all of a sudden, Lorne Michaels calls him personally, like, you got to come back and do and meet with us. So you should, if you like Will Ferrell, you should Google that, because it's out there and it's like literally just him in the studio, and he's in the Saturday Night Live studios on the floor playing with an invisible ball of yarn. It's pretty funny. So anyway, so yeah, all right. So if gold collapses, that's dead, and that's dead. But you're not in because profit, and that's, I suppose, why we have such analysis. Look at this dropping. How awesome is that, right? I mean, seriously, right? Look at how fast it's dropping off the line we yesterday. Holy smokes, right? Look at that. It took 24 hours to go up, and then just 4 hours to come down half. What was that red line? The top. See? Where's my drawing tool? No? Yeah. And the red line is here. Got it? MRC? CDBDIs? Yeah. See? Nice! So our short-term target is here. How about this one? I'm losing money still. Dang! You hate it? Sucks. But I'm up 210 pips today. So, not a bad day. This one's losing money, however. So let's go through some of the other trades. No. We gotta go to this one. Euro yen. Okay. You guys remember buying this one? How's it look now? Look, I'll move my stops to break even now. Love it. You guys remember buying the double bottom? Look at the breakout retracement in your face, golden. We did this stuff together last week. No? Really? Well, some things to point out. It's monthly M2 and weekly M2 right here. That's a buy zone, is it? Could you define it as anything else? Probably not. Well, but Wayne, not only is it support, it's a retracement after a breakout after a double bottom. So one of these things we talked about months ago is that you can make a career of finding double bottoms with higher highs and buy the dips at the roll reversal. And just do that one thing. Just buy it here, right? Now this goes back to probably July when the markets were slow, and I was talking about how to build consistency into your trading. And you know, Daniel, if he's around, he'll tell you that when I met with when I was helping YJ, it was I don't know, what was that, 4 years ago, 5 years ago, well, 4 years ago, I guess. I gave him that task. I said, do that 100 times. Simply look for double bottoms or double tops, then wait for the breakout, then wait for the retracement, and then buy or sell, depending, right? Cool, bro. Cool, bro. Yeah, yeah, Katie, that's right. We had a double top, then a drop, then a retracement, and it's been falling and tracing ever since. But that's what happens after a reversal is a continuation of new trend, right? Cool. Oh, well, this one's still profitable. Let's see. This one is not an amazing, happy story. Okay. I'm long at the WM2. Why would I be long at M2? It's also a CPP, isn't it? M pivot point. Let me erase this. Yeah, so here's the monthly, here's the weekly, and here's my entry. Not the world's greatest trade, but I've done worse. So I'm profitable, but not much profitable, and I certainly wouldn't be confident in this. Okay? But it's something, isn't it? But it seems like, right? It's an okay place to buy right here, huh? So if I go out to the hourly chart, maybe it makes more sense to you that we have this going on. Does that make sense? Why I would buy it at a roll reversal, monthly central pivot, weekly M2? Does that make sense? It's not a great trade. It's clearly not trending up. It totally could be rolling over. I get that. Okay? But I ain't doing it now. So I'll move that to break even. Cool. Kiwi yen, we have a question about Kiwi yen. So I have a bottom at 77.50. It's pretty clear though, right? This chart's pretty clear. Another one at 75, 77. Now let's just call it 75, 75. Well, the thing is, it's still a downtrend, so you better pick your bets wisely and not risk a lot. The other thing to do is wait for the double bottom, higher high, higher low, and then start going gangbusters. Because the thing is, we don't know what it's going to do here, or if it's going to do this first, and then work its way up. I mean, we don't know, right? Versus this. So we wait till market conditions are favorable. Let's see. Okay, you'll probably judge me on this one, and don't judge me. Yeah, I know, piss poor entry. I know. Suffering the piss poor entry syndrome. I effed this one up. I don't know what the F was going on here. I don't know. I don't know what to tell you except it sucked. But I haven't lost enough money to really care about it yet. So can I say it sucked? It was crap. It's been a while since I hold my head up high. It's been a while since I said I'm sorry. It's been a while since I've left things up, always do. All right, yeah, no. I don't know. I must have been looking at a smaller time frame. I honestly don't even remember. I'm speechless. I don't know. It's bad. It's bad. It's bad. If I back out, I mean, what kind of idiot would buy this? The only thing I can think of. No, I don't even think that's true. I can't figure it out. I must have clicked the wrong button or something. Was it this week? No, I honestly don't remember. Who cares? I'm thinking. I think you know what? Here's what I think it was. I think I've had it for a while. I think I bought this retracement. So I'm going to claim that is what's happened. Okay. I could see this. I could see this. And in a scenario like that, you buy the moving averages. You don't buy the pivot. Okay? And you can see that would have been a rock solid entry. Okay? So that was November 6th. And what is this? CAD yen? That's now November 9th. Am I reading that right? I couldn't effing tell you what's going on there at all. Sorry. I don't know. 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 Quit yelling at me. All right. We did that one. Da, 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 da. 'Cause I said I'm sorry. Trying to recover from this one too. I had it right below the pivot area, so I just gotta wait. I'll recover. All right, so what do we want to do now? Euro topish, right? Euro dollar topish. Okay. Oh, here's our Euro Aussie trade from yesterday. You guys got this, right? Remember we set all this up. I did the relative strength exercise. Breakout, pull back, breakout, pull back. The thing is, it's a trick question. You're supposed to be out here. But the euro's so strong and the Aussie's so weak, it's on its way to the next, right? A mood trade. Yeah, but that's more of a day thing, not a weekly thing. Okay. So, let's see. If you take the swing trading course, in that I say that this top predicts a bottom down here, didn't quite get it. This bottom predicts this top, this bottom predicts this top, this bottom predicts this top. And then this, you're just so out of the zone, it's overbought and then hits the target earlier in the week. So or early in the day. But it's this situation where if you clear above the dailies, you keep buying until the cows come home. And that's just old terminology out of my book. So we're talking about stuff 10, 12 years ago. But this is how you use daily pivots. Okay. How many days do you see of significant moves outside the daily targets? Yeah, could it be a double top? Yeah, well, that would be the right place, sure. Yeah, one basically, Alex. Two, even I guess maybe three, right? Maybe four. So it looks like 90% of the time we stay within the pivots. Now red means take profit, right? What happened when we hit that red area and people took profit? They retraced. What happened here when we hit the red area and people took profit? They retraced. What happened here when we hit the red and people took profit? They retraced. This is basically it, right? What happened there? People took profit, they retraced. They had waited to Monday, but still, that's where you're supposed to take profit. So is it always the case? It's not always the case. This green zone is where bears take profit and it should retrace. Green zone is where people should take profit and it retrace. Green zone, retrace. Sometimes it doesn't, right? It's not that different from the weekly swings and the monthly swings. Would you agree? So therefore, it's plausible that you could just simply daily swing, weekly swing, and monthly swing using the same methodology on different time frames and be relatively okay. Okay? So for example, if you bought here, is it likely you lost a lot of money? You were wrong. Did you make a lot of money? Or did you lose a lot of money? No. You sold here. Did you lose a lot of money? You bought in here. Now, these are 50, I mean, this is like moved up and down for like 8 hours. Okay. I'm trying to find places. These are hard to even get it wrong. You wouldn't have bought this, right? So let's try to get in here. You could have bought this because that's where it opened and it failed. I get that. Would you have sold here? I don't think you could have. And this is the end of the day, so that's not really the open. Now here it's iffy, right? You could have bought or sold this. Okay, that's fine. But you wouldn't have lost a lot of money. Okay, this is opened on the sell. I suppose you could have bought it here, like London Open or something, but you would have lost a lot of money, right? It's again, I think if you know, these are like buy zones. This is a sell zone, and this is a buy zone. So that really comes down to your bias. But it did make a higher high, so to have it retrace in here is pretty obvious. Back into the role reversal, which is a buy. This is the most dangerous one, right? I hope you can see though that you can trade daily, you can trade weekly, and you can trade monthly. Look at this Euro Oz, huh? Up, down. Look what's happening. It's a J low, right? Oops. It's trying to do this. And here we are again. And yes, this could be a top. Okay. Is this radically different on the weekly? And I can see if I was a bull where I would buy, I could see as a bear where I would sell. And having that knowledge, I can see I can have opportunities that succeeded. I can see opportunities that would not have failed at much cost. And I can see a lot of situations where I just avoided trading altogether. But see, when you have a bias, you know what strategy you're going to employ, bullish or bearish strategies. And your technical analysis lets you know at what prices. So when you're wrong, but you're in the market, you pay a small penalty. But when you're right in the market, you make a lot. And everything else is avoided. So I look at it both daily and weekly, and I'm sure we can flip it over monthly. This is Euro Oz. I mean, it's not something I'm following minute by minute, right? But looking at this, it's all very tradable. It's all very tradable. I think it's cool. So it looks like it's pretty late in the day, so I got to jump, babe. It's real. Peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow. Thanks for being on my team. Thanks for being a client at TradersWay.com. Bring a friend tomorrow, huh?